Looking to start a company in Ireland but not sure what company type best suits your needs? Making the wrong choice can be costly in the long run. But don't worry, today I'm going to break down each company type available to you here in Ireland to give you a better understanding of which might be the best fit for your business. So let's jump in. Every business is unique from one another, meaning it is only right that there are several company structures available to choose from to ensure each business is catered to. Each structure offers distinct advantages depending on your business needs, liability preferences, and growth plans. The types of limited Irish companies include a private company limited by share, a designated activity company, company limited by guarantee, a public limited company, and an unlimited company. Private companies limited by shares, aka LTDs, are by far the most popular choice of company type for private commercial businesses and ventures here in Ireland. LTD companies each have their own constitution, which is a formal document that sets out the rules governing the company and provides limited liability for its members. This means that the liability of the shareholders is limited to the amount paid for shares. This company type is recognised as a separate legal entity from the shareholders and directors of the company, meaning company activities do not impact personal assets. LTDs do not have an objects clause in their constitution, meaning they can trade in any business that the directors and shareholders see fit, as long as it's legal, of course. Its lack of an objects clause allows for wider trading flexibility, making it an ideal choice for startups. So what are the requirements for running an LTD? Irish LTDs must have at least one director. However, in the case of a single director company, they must appoint a separate secretary. If there are two or more directors, then one of these directors may act as secretary. LTDs must also have at least one shareholder and can have as many as 149 shareholders, also known as members. Single member companies are not required to hold annual general meetings and can pass both special and ordinary majority written resolutions. LTDs must file annual returns with the company's registration office, aka the CRO, 6 months prior to incorporation and then every 12 months from then on, regardless of whether the company has traded or not. A company limited by guarantee, also known as a CLG, is usually used in circumstances that require a separate legal entity and corporate protection in organisations such as charities, trade associations, societies, sports clubs, and social clubs. This entity type is well suited for non-profit organisations or non-governmental organisations such as NGOs. They can also be used for property management purposes in the servicing and maintenance of residential associations. CLGs are required to have a minimum of 2 directors. There are also no shareholders or share capital with a CLG company type. Instead, you are required to appoint at least one member who guarantees to contribute €1 each to the company in the event of its winding up. Directors can also be members. The legal title of a CLG must end in the suffix Company Limited by Guarantee, or CLG. However, there are some expectations for this. Companies can apply for the removal of the suffix when its objects are in the promotion of commerce, art, science, education, religion, or charity. In Ireland, a public limited company, also referred to as a PLC, is used in circumstances where a business intends to seek a listing on the stock exchange or where a major business expansion scheme is being formulated. This company type is rarely chosen by early stage companies. PLCs must have a minimum of 2 directors, and there is no restrictions on the number of shareholders. They cannot dispense with the holding of an AGM, and the nominal value of the company's allotted share capital must not be less than €25,000, at least 25% of which must be fully paid up before the company commences business or exercises any borrowing powers. And finally, the name of the company must end in Public Limited Company, or PLC. Unlimited company types are becoming a more popular choice here in Ireland. There are 3 types of unlimited companies available in Ireland. The first type is a ULC, which is a private unlimited company with a share capital. The second is a PULC, which is a public unlimited company without a share capital. Finally, there's the PUC, which is a public unlimited company that has a share capital. The main distinguishing feature of an unlimited company is that members do not have limited liability like limited companies. So what are the requirements of running a ULC? ULCs must have at least 2 directors, and there is no limit of the number of members that the company can have. When a ULC has 2 or more members, however, they may not dispense of holding an AGM. The legal title of the company must end in the suffix Unlimited Company, or ULC. Non-designated ULCs do not need to file accounts publicly with the CRO, which can be an attractive feature of this company type. Another option for starting your business is to establish yourself as a sole trader or general partnership, rather than forming a limited company. A sole trader is an individual who owns and operates a business without creating a separate legal entity. This means there is no legal distinction between the person and the business, making the individual personally liable for all debts and obligations incurred. This structure is often appealing to freelancers, consultants, and small scale entrepreneurs, as it allows them to focus on their business without the complexities of legal formalities. The requirements for running a sole tradership. To operate as a sole trader, you must register a business name with the CRO if you trade under a name different from your own. However, it is important to note that registration does not provide protection for business name, meaning unlike a registered company, anyone can register and use the same business name as you. You must be an Irish resident to register as a sole trader. For Irish residents who are non-EU nationals, please be aware that you must have a Stamp 4 visa and a letter of business permission from the Department of Justice in order to register a business name as a sole trader. Additionally, you must register for income tax and any other applicable taxes with revenue. We have linked some more in-depth articles on all the discussed company types in the description below, so check them out to learn more. If you are looking to register a company in Ireland and would like some professional assistance, please check us out at www.companyformations.ie, where you can browse our services or contact the Company Bureau team. Thank you so much for watching. If you enjoyed this video, please give us a like and subscribe to see more content like this from us in the future. Wishing you all the best on your company journey, and bye for now.